Okay, good evening, ladies and gentlemen. Just another very quick weekly forecast session for the week ahead, starting obviously this evening. But as everyone's aware, I don't trade Asia session, so we'll be going from Monday, the 9th of May onwards. Hopefully, we are looking for the bearish trend to continue. However, there are a few factors that we need to watch for within this trend as it develops. So what we have been seeing is obviously the bearish bias that was formulated mid 2021 has continued. We've been calling this since August, September of last year, and obviously been watching the sells down to the inefficient levels that we saw from COVID of last year. The market's obviously now targeting these levels. There's a slight possibility of a reversal, which I'll mention here on the monthly chart, sorry, where we can see that there is an inefficient wick that was left behind here, and this liquidity lying back here, which was obviously tapped, buy orders were placed here, and the market recovered up to areas of liquidity at the top. So where the market's now come down, we can see the monthly push from April down into May, and now May is now obviously trying to push down into this zone. It seems like it's forming some form of rejection. So this area of liquidity down here is quite interesting for us to watch to see whether we get a reversal out of it. And the reversal could be to target areas of liquidity that we have left up above price at the moment. So as we flip down to the weekly chart, we can see how it's now tapped into areas of demand. There's a 4-hour area of demand back here, which the market has tapped into. There's another 4-hour level down here where price kind of moved itself out of the zone. And then we've also got liquidity sitting down here where the market came down, respected a level. And then obviously we see buys out of the zone, took interim highs, continued higher, didn't come back to test the buys, and then pushed out from the zone. So we're currently sitting in an area of interesting reversal. We want to see what the market does as it comes into these levels. On the daily chart, we can see how the market kind of tapped up into our area of liquidity that we marked up midweek. And this was also pre FOMC, I think it was, where the news was released. But clearly we can see that the market came in, tapped into an area of liquidity. This was actually a fair value gap tap as well, and kind of sold out of that area. And it's come down, and it's obviously left behind liquidity through the push that occurred on Thursday, Friday. And then obviously we've got a slight reversal on the Friday, which is characteristic of GU. So beautiful trade, very characteristic of GU past week. Monday sold down, Tuesday up, Wednesday, Thursday down, and then obviously Friday slight reversal. When we go down onto the 4-hour chart, we can see how the consolidation has occurred. Let's get this indicator on now. So effectively, we've got obviously Wednesday started to sell, Thursday sold, Friday obviously stagnated, and then we've got consolidation within the area of demand that we're looking at below us. Price is obviously sitting above it at the moment, tapped in, hasn't bought out of it. So obviously we're looking for another tap somewhere, but what we have also got is on the lower time frame, we've got equal highs left behind. And we are possibly, as the week opens, looking to target liquidity that's sitting up here. Bearing in mind, we've also got inefficient wicks sitting here as well. So this is also an area of interest for us to just basically watch for. So equal highs may get tapped, supply may get tapped here, and then we may see a sell down. However, the market could also buy into this, continue higher. Area of liquidity here, we've got a big fair value gap. The middle of that may be an area where it gets targeted, and then obviously the market sells down. However, at the same time, as I mentioned before, we have also got, I don't know how far across that. Okay, the monthly wick that we were looking at previously at this point here, 552, okay, is kind of sitting below us at the moment. So the market has kind of come and tapped it. It's kind of moved away from the zone, but we're still above an area of 4-hour demand that hasn't been fully mitigated. So we may well see buying up to sell down to then buy up out of this zone. So it's just something that we want to be wary of. When we go back onto the monthly chart, you can see where I've kind of marked that inefficient wick. So effectively, it's this area I believe I was looking at in terms of it getting mitigated. And we want to see how that kind of plans out. So even on the weekly, when we go down and check this area here, it was the weekly wick that I was looking at. So this inefficient zone here on this wick has been tapped 50%, but the market hasn't bought out of it aggressively. So may well be a reason for the market to buy up out of this. When we go down to the lower time frame, we can see consolidation and obviously the move away from the market at this zone. So the initial move occurred here. We've got buyers coming in, bought out, took interim highs, came back, retested, didn't then test the entry down here or here, and then bought out of the zone. So we clearly have liquidity still sitting down here, still sitting down here, which is what we've kind of marked up across here. So fair value gap down here, 4-hour demand here, and we're sitting in 4-hour demand at the moment. We just want to see how the market reacts out of this. If this 50% gets tested again, the market's going to break through and sell down. So that's what we want to watch for. Getting back to the 1 hour, so we got areas of liquidity below us, liquidity above us, plus we're looking for a buy up to sell down. If the market comes and starts respecting this zone again, buys into this 4-hour demand, it could very well buy up out of this. On the 15-minute chart, we can see how the consolidation occurred throughout Thursday, Asia session, Friday, whole session, and we've got a whole bunch of liquidity lying above us. So as we said, liquidity above us, possibly a sign for the market to buy up into, to sell down deeper, or possibly even target liquidity above into this zone, possibly even targeting here. It may even be a reason for the market to reach way up for levels that it left behind earlier on in the week, targeting inefficient wicks up here even. So we'll have to see exactly how it plans out. I don't anticipate the market breaking this level here, so I'm looking for it to kind of take 50% of this fair value gap and then sell down to then see what happens at this point to possibly buy back out of. So we'll see what happens. A slightly longer video than normal. I hope it has been informative. As with everything, if you do find this beneficial, please do like, subscribe, share to those who you think it would benefit, and also forward on my Instagram. Any DMs in YouTube and Instagram are always answered, and I'm more than happy to engage with people. I have been getting quite a few questions and queries over the past few weeks. Have had a few good discourses, and I may well be putting out some content in regards to clarifying some details from people and also showing the appreciation that has been had on social media platforms. Thank you very much. Trade safe. Speak to you next week.